Jerry Greenfield, a co-founder at the ice cream giant Ben and Jerry's, is leaving the company after almost 50 years. He says the independence that Ben and Jerry's once had to speak up on social issues has been stifled by the parent company Unilever. Let's get more from Alison Kemper, an associate professor of entrepreneurship and strategy at Toronto Metropolitan University in Toronto. Thanks very much indeed for joining us.
Glad to be here.
It's been an odd situation for years, hasn't it? Ben and Jerry's
It's gone on and on and on.
Sorry, and Unilever sort of tolerating it, but it seems to have come to a head now. Sorry, I cut you off.
No, I can't imagine that it was a great idea from the first. That in 2000, when they sold the company to Unilever, clearly they had commitments from Unilever. But the company was Unilever was a different company back then. Paul Pullman ran it for years and years to be the most sustainable company in the world and to make lots of money being sustainable. And the commitments of Unilever may have seemed like a great idea then. And getting an influx of capital that they got from Unilever would have been a great idea. But it has been conflictual for most of its history and got much worse after Pullman retired. The other thing about Unilever is they've had, I think, 4 CEOs in the last 6 years. They're utterly in chaos, I think. So it's a hard company to be part of. They're spinning off all of their ice cream into a company called Magnum, and Magnum wants to retain the Ben and Jerry's brand because it's very valuable.
The Gaza seems to have brought this to a head. In November, Ben and Jerry's actually sued Unilever, accusing it of silencing statements in support of Palestinians. So that seems to have been the thing that finally forced the
Ben
confrontation.
And Jerry have been very vocal in their support for Palestine for a long time, and this has become more and more dangerous in their context, and basically any context at this point. People are not supposed to be saying anything pro-Palestinian, and this has been really exquisitely painful for them. As well, they have been in conflict over LGBTQ issues, and basically the current president of the United States is doing things that would provoke a whole lot of new ice cream flavors, we'll say.
It's a tricky, Gaza in particular is a tricky one, isn't it, for corporations?
It's enormously difficult for companies because there's a very successful and worldwide boycott campaign, and companies don't want to be caught up in the boycott. But on the other hand, there's an enormous amount of pressure from American investors and business leaders to remain silent on the issue of Gaza.
I mean, companies always want to have their message under control. I always thought it was kind of refreshing that Ben and Jerry's was, there was sometimes at loggerheads with Unilever, its parent company. It kind of broke this bland corporate messaging that we always see.
And I think that under the leadership of Paul Pullman, that was not just tolerated. There was kind of an appreciation for that. But I don't think that that's happening at this point. That we see that it's enormously conflictual to the point of litigation.
I mean, maybe companies should just shut up about politics. I know that's a bigger debate, but, Well,
Ben and Jerry's was not set up to shut up, right? Like they were selling ice cream as a platform for their social views. They were never meant to be quiet. They were not just about ice cream at any point in their history. So I think you have to figure out if you really want to do that. It's very hard to do that if once you've done an IPO and you're in public markets or you've sold to a larger company that is publicly traded. That the interests of investors are completely opposed to controversial issues. That they fear losing market share, market cap, enormous losses because of political positions of companies.
I suppose some companies are willing to double down. I mean, Patagonia has been very outspoken about global warming, saying we're in business to save our home planet, but they're not part of a giant, larger organization.
No, you have to look at the governance of all those companies. Most of the companies that do that have tight relationships with the founders. Often the founder continues to own the majority of the company. They may not even be publicly traded. Because taking control of your message like that, it requires the support of your investors. At one point in Paul Pullman's tenure at Unilever, he said, "If you don't like our messaging, sell your stock. I only want investors that believe in what we're doing."
What do you think about this backlash against ESG? I know I'm using glib phrases there, but in America, there's a constituency that says really environmental, social, and governance shouldn't be a big part of your investing decision.
For decades and decades, business scholars have been trying to determine whether different ESG policies increase the value of companies or decrease the value of companies. And there's kind of mixed results. By and large, good ESG strategies increase profits like any other good strategy, but they have to be carefully considered. And I think that the walk back of all of that is enormously problematic. We've seen what happened to Target when they walked back. The Black community in the U.S. just ran away from Target and wandered into Costco's and started buying Costco. And the impact on Target's bottom line was enormous. So it's pretty risky to walk it back.
We'd better leave it there. We covered some fascinating issues there. Really appreciate it.
It's a really interesting set of issues, isn't it? Yeah. Thanks for calling.
Thank you. We better jump. Alison Kemper, Associate Professor of Entrepreneurship and Strategy at Toronto Metropolitan University.